thanks for coming by. It's really good to see you again. We've known each other for well over 5 years.
A few years.
7 years.
Yeah, indeed.
Absolutely. And even when we first started working together, probably 2015, maybe even earlier, you were one of the few truly frontier market fund platforms in the region. At the time, it was still a question of China versus ASEAN, but I thought it'd be great to have you on board today and talk about the markets that you're covering, because actually a lot of fund flows are moving in the direction of ASEAN, and there's still a tremendous amount of interest there. Was this book simply in the right place at the right time when they pulled the trigger?
It's a good question. I have to admit, we don't have this famous crystal ball where we see the future, but there were some signs, you're right. We saw the first quarter GDP numbers coming in much lower than expected. We were expecting a number over 4%. They came in at 3.3. So that was definitely the first sign where we thought, okay, the government must do something. What exactly they were going to do, we obviously didn't know, but yeah, they have a few things. For example, cutting interest rates was an obvious choice. And so indeed, that's what they did.
In addition to cutting interest rates, you mentioned there were a couple of other programs that they had set up, including driving liquidity, incentive programs. Which one do you think from a fiscal level was most impactful for the book?
I think it's a combination of all, because they have several issues which they need to address. So they want to stimulate the economy. So on one hand, they do that through these infrastructure projects, which they are pushing. But they also cut the VAT from 10% to 8%. So that's helping the consumer story in Vietnam, because we have almost 100 million population in Vietnam and the fastest growing middle class in Asia. So it's the Asian consumer story is obviously an important factor in the development of Vietnam. And so they are helping to stimulate that sector also through tax incentives, which they gave also to certain sectors, and obviously the VAT cut, as I mentioned.
Excellent. It does talk about some shifts in the financial markets, and some of the returns did come from like insurance and other areas in the finance sector.
Yep.
Do you want to focus a little bit on that and tell us where we're going?
Part of the reason why we performed so incredibly in 2021, which still was a COVID year, was we were quite early in taking a bet that interest rates will remain higher for longer, because at the time commodity prices were coming up, inflation came up. That was way before the war in Ukraine started. That was mainly due to COVID supply chain issues. And we said, okay, who is benefiting from higher rates? And given that we didn't want to take too big exposure in the real estate market, we said, okay, insurance companies is actually a nice beneficiary. They are heavily impacted with higher interest rates. And we had bank exposure. We had quite a lot of banks, but they rallied so much. So we took profit in end of 2019 and switched into insurance company. Now interest rates are coming down, but there is a lag effect on the insurance companies. So they will continue to benefit the whole year. We think only in 2024 they will start seeing the impact of lower interest rates. But at the same time, they're also benefiting from a post-COVID recovery. However, we start reducing exposure to the insurance sector slowly but surely and shifting into more infrastructure-related companies.
Infrastructure projects, when I think of infrastructure projects, I think of development funds, I think of multi-decade type of projects. So how are you positioning the fund to take advantage of infrastructure in perhaps a more shorter term, more shorter duration type of play?
Yeah, there are some companies which are specialized in, let's say, road constructions because of the various highways which are being built in Vietnam. We wrote about it in one of our past newsletters of how much more projects are in the highway sector.
Right.
But it's not only highway, it's also increasing or improving the infrastructure in ports, airports, in undergrounds. So the subway in Ho Chi Minh and in Hanoi is still an ongoing project where they still are building it and expanding it.
When you look at, and historically, and it still is to a very large degree, Vietnam is an export-driven market, manufacturing hub, almost like an offshore de-risking beneficiary of what's happening with China and just the dynamics right now in geopolitics. There's also this consumer story, which you've alluded to several times. Insurance is actually part of that as well. Absolutely. The book is now shifting a little bit in the direction of back towards logistics, infrastructure, etc. How close are we to a more robust consumer story, or are we already amidst it?
If you look at GDP per capita, for example, Vietnam is still quite a poor country if you compare. We have in 2021 the GDP was a little bit more than $3,700, 2022 over $4,000. It actually started overtaking the Philippines in terms of GDP per capita. And if I look at World Bank forecasts in 2030, Vietnam will probably overtake also Indonesia with a GDP per capita forecasts of over $11,000. So it's a phenomenal growth story still happening. We are by no means there yet.
It's a very large population actually. 100 million, it's a third the size of Indonesia, but it's still significantly larger than, say, Malaysia.
Yeah.
But the growth prospects there are a lot higher, and the GDP per capita is still half of where Malaysia's at. A lot of the folks that I'm talking to onshore Malaysia, still a little bit bearish, a bit anemic in terms of, at least in the real estate sector. But Vietnam, there's a lot of bullishness. Is that a function of Vietnam's demographic? Is it a function of scale?
Yeah, look, it's a combination of several factors. If I look, for example, at labor costs, the average monthly income in Vietnam stands around $300, a little bit more. And in China, it's already over 1,300. So in comparison. So we are still, from a terms of labor intensive work, it's still, as a manufacturing hub, it's still very well suited. So what Vietnam did over the last few years, they negotiated a lot of free trade agreements. And that's really helping now in terms of positioning themselves as a manufacturing hub, especially in times where we have increased geopolitical tensions. Vietnam is nicely benefiting. So companies are looking for alternatives to China. So you see Apple, for example, they are heavily investing in Vietnam, also in India, of course, just to reduce dependency on just one single country.
This is a fascinating point because on one hand, Vietnam is a beneficiary of the de-risking of China and this movement of offshoring from China. At the same time, one of Vietnam's largest trade partners is China as well. So how does your team reconcile that as it looks at macro drivers? Is it what's bad for China is good for Vietnam, or is it what's good for China bad for Vietnam, or is it what's good for China good for Vietnam?
Look, it's very interesting. Indeed, the biggest two trading partners of Vietnam is China and the US. We call that bamboo policy, no? So they need to manage these two relationships very carefully, and so far they did an outstanding job. So, for example, Anthony Blinken was recently in Vietnam, and they started talking about upgrading their partnership to a strategic partnership. So that obviously will increase the export market to the US for Vietnam even more. It's already their biggest export market. And on the other hand, you have China, where they mainly import most goods, and they export some agriculture goods, fruits, rice, vegetables, seafood, for example, is a big part of it. Shortly after that announcement, maybe a few weeks later, we saw a news ticker coming out that China intends to build a highway in the northern part of Vietnam and southern part of China to connect the two countries. Both of them have an interest of keeping that relationship with Vietnam, and so far Vietnam is managing these two relationships quite well. So we definitely have more and more institutional investors looking at Vietnam.
And where are these institutional investors coming from? Are they US centric? Are they pan-Asia? I ask this because when we talk about the financial sector, when we talk about insurance, a few years ago we ourselves worked very closely with Korean institutional investors to tap into the growing consumer financing market in Vietnam. What is the breakdown of institutional investors?
Yeah, what we are seeing are mainly family offices, single and multi-family offices in Switzerland, which are increasing their exposure to Vietnam, but also Australia. Recently, we had a new client which found us because probably he was searching on Bloomberg for the best performing Vietnam funds, and also Singapore. Singapore becomes more and more important. I see a lot of inflow of money to Singapore.
I'd like to get your comment on some of the opinions that I've had about Asian private credit, how the region could potentially sustain a shock to the system if there were issues in the US related to either not just recessions, but a credit crunch, perhaps in Europe and otherwise. And the reason why I asked is when we were last actually in Singapore at Maybank's conference, it was challenged whether European investors or Western investors would feel more comfortable investing into Asian private credit, or at least in Asia versus Europe right now. And a lot of them prefer Europe. Could be due to covenants and whatnot and infrastructure and just regulation. And the way I feel about it, this is a region that's more comfortable with higher interest rates than anywhere else in the world, simply because we've been faced with it for much longer.
Yeah, if I look at credit growth numbers, for example, in Vietnam, they are not very strong at the moment. So to your argument, learning to live with higher interest rates, that's definitely the case in Vietnam. Vietnam typically had much higher interest rates than in the US, and people managed. I hear more and more voices like Goldman Sachs, which are predicting that interest rates might come down in mid of 2024. That really creates quite an interesting environment in emerging markets and frontier markets, because typically lower interest rates is a positive sign for equity markets.
But you're implying an even more explosive 3 years ahead if rates continue to drop from there.
Yeah, I would say so. Of course, as I said at the beginning, we don't know what's going on with Taiwan, with China, with the US, or in Ukraine. So these geopolitical risks, they are there, and we don't know what's going to happen. But assuming that it's not escalating, I think we're going to have in Vietnam a fantastic time ahead.
There's a couple of interesting slides. The one that you showed about government debt to GDP, that the government debt to GDP is only 40%. Does this mean that we have more ammunition in Vietnam to navigate through the next couple of years?
Yeah, absolutely. Vietnam has a low debt ratio to GDP. And also, when you look more deeper into these numbers, sometimes also local governments have also debts. But in Vietnam's case, that's very little. It's maybe 1% more. So the number comes up maybe to 41%. So that's really neglectable. So yes, the Vietnamese government is in a comfortable situation that they actually could increase their debt ratio if they need to. But so far, that's not really necessary. But they actually, if I look back the last few years, they constantly started reducing their debt levels in terms of ratio to GDP. So they came down quite nicely from around 60% level, and they might come up now a little bit with this infrastructure project, which they are pushing now this year.
So let's talk about valuations. PE ratios are coming down quite significantly in a lot of the regions across Asia, including Vietnam. We're looking at really great deals close to just after financial crisis in 2009 through 2013. Yeah, are we looking at the beginning of another run?
Yeah, if I look at the forward PEs, it's really, we are back to the levels of 2013, 2014. So it's almost like 10 years back when we started the fund. And we regard these valuations actually as a buying opportunity because the valuations really came heavily under pressure mainly last year when the market corrected quite heavily. But that brought valuations down to really very attractive levels. So also our fund, the valuations are coming up.
So we talked a little bit about shift in manufacturing, we talked about infrastructure. Let's look a little bit further down, year 2, year 3. Some of the themes that you've talked about in the past have actually played out a lot faster than you thought they would, I would imagine. Where do you see sector themes and ideas start to percolate, or what excites the team?
Look, besides the topic I was talking, I think the manufacturing shift will continue for a while, and infrastructure, I already talked about it. But one important sector is definitely tourism. So obviously COVID, like many other countries in Asia, had a severe impact on tourism numbers. If Vietnam was just about to start coming off the ground with international tourism, and in 2019 there were around a little bit more than 18 million tourist arrivals recorded in Vietnam. That in overall numbers is around 18% also. And the major part of these 18 million at the time came from China. So over a third was Chinese tourists at the time in 2019. Then COVID obviously brought down the number almost to zero. And now we see a strong recovery as of 2022. So end of 2022, there were around a little bit more than 3 million tourist arrivals recorded. And now the current number is around 6.7 million is, I think, the latest number, which we saw as of end of July. And that's going the right direction. But interestingly, the Chinese tourists haven't recovered as fast as others. No. So that's clearly a big gap between in 2019 of around over 6 million arrivals. We are now, I think, around 1 million arrivals.
Was that because of some of the restrictions that China had on tourism? I don't recall seeing Vietnam as one of the names on the banned countries.
I think it has something to do with the reopening of tourism. And I think a lot of people found it very difficult to get passports issued or identity cards in order to travel.
Hey, thanks a lot, Andreas. Really good to see you again. And
thanks.
Good luck this year, and we'll catch you on the next one.